Good afternoon, everybody. Saturday, August 28th. Welcome to the Plus3 forecasting commodity and future show. My name is Ben Maldonado. As always, I'm here with Barrie Hederachi. How you doing today, Barrie?
Doing pretty good, Ben. Doing pretty good. A little under the weather, but doing okay.
Yeah, the market sure was fun this past week. Last week we were talking about the excitement we had because of the cycles and sort of where things were, and we were at a point of where we expected to see increased volatility, and we sure saw it. So, what are your overall thoughts after the week we had?
Well, I think whatever I think some directionalities in play now, not just in the things I'm watching, but also the commodities. We might be starting some new legs, and continuing the other ones. So the stagnation might be over. So we'll see.
I'm with you. I'm with you 100%. That it's going to come through in the section we do on commodities today. We'll take a look at them and see how things are turning and starting to hopefully move again. But let's start with our old friend Bitcoin. This chart continues to frame the action really, really well. And you pointed out last week that the big test this coming week was going to be how it handled this half square. And as you can see, the half square held it perfectly. We came up, tested it, sold off back to this trend line, and now we're sort of in a bullish consolidation here. Overall, the pattern is still favorable, still bullish. Hitting these half squares and pulling back into normal sort of structural support is completely bullish and consistent with higher prices going forward. So I'm still constructive on Bitcoin. Obviously, if we get above and can sit on top of this half square, then we open up, the up back near 60,000 and the old highs. So
it looks like it. I just noticed it looks like we did an ABC up to that half square coming off the July low.
Yes, we did. An absolutely perfect one. Absolutely perfect ABC. Went right up into that. I didn't have it drawn in, but you are absolutely right. I noticed that during the week and saw when I saw it hit right
on it. Yeah.
Right on it. I said, that's a good spot and a great marker to know. So we know that in this area of 50,675, 50,700 area, it's really, really important price wise. We get above that and sit on top of that, I think we're off to the races. If we get stuck below, we may consolidate and bang around in here for a while, but that's a really important price level.
Right.
So Bitcoin overall bullish, says something about risk right now. We'll also see that in the commodities. So I'll throw it back over to you and run through the big five, and then we'll come back and review the commodities and have an overview of what's going on there. I see the E-mini.
Not for long. It's about to leave the screen here. This trend.
Yeah.
Well, what can we say? Let's take a look at the just to catch up from last week. We were up 288 degrees off the March low. And I think one of the numbers we talked about last week was its 44, 45 level, being that we should hold it. And if we hold it, that we're expecting the market to be in a bullish position, that it's in a strong footing. And of course, it held it really well, actually far above it. And market held it pretty well. And we made new highs after the comments on Friday. So for now, my take is that we have to stay with the bullish trend and not mess with it when things are just moving in one way. And I'll cover a little bit more when we get to the weekly chart, but for now, I think the levels we have to watch are 44.92 for support for next week. So I'm going to tighten this up a bit, and I'll tell you why. So it's 44.92 for support. And if we can manage that area, I think 45.40 would be the next upside I'm looking at.
Yeah, it's interesting. It's interesting you came up with that number, because I was just looking at my monthly resistance 45.30, weekly is 45.45, daily is 45.26, all right in there. Yeah.
You know, what's interesting is people might not know that we do our own work independently, then we come in to talk about it. So we don't really know what you're going to talk about or what numbers you have, that's why it's that's why it's interesting, right?
It's helpful. Yeah. It gives us a little sanity check on each other.
Right. So the bracket for next week, we're looking at a target of about 45.40 and 44.92 to the downside. The downside level is really critical to watch, being that we're still, we cleared the square, but we're still sort of in the neighborhood of the this 288 degrees up. And to quickly take a look at the weekly, like we do every week. So this is the reason, we have a lot of time cycles expiring right into this this week, give or take 1 bar. And because actually, let me see if I can find that chart really quick.
That 144 is like a brick wall, isn't it?
Yeah, it's it's a good one. So can you see this okay?
Yeah, that looks good.
And this is the chart I normally post on Twitter. You can see here, we're 81 bars from, and these are all harmonics of the 72, right? We're 81 up. It's high to high, we have 81. And low to high, we have around 72. And this 81, I'm kind of, it's an interesting number, because you can see if you look at the past 3 highs, the prior high to the one before it was 72 weeks. Before that, it was 36 high to high, then 72 high to high. This is 81. And of course, 36 plus 72, we had 108 high to high. So there's this whole dynamic of 72 harmonics working here, and right now we have an 81 here. And I think, after this is gone, let's say after next week, 82, 83, 84, none of those really count. So here we have something we should be looking at, and that's why I'm highlighting that, just to be clear. As for going back to our weekly that we watch, the reason to watch that really tight bracket, 44.92, is in case we get a reversal up here. Until we really settle above it, I don't think we've settled above that square yet. We're kind of penetrating it, testing it. Because of the 81-week count, there's potential that we can reverse in here. So that's the whole story with this. We're watching. We're going to be alert to that. Try to be aware of that. And if we can clear 45, if we can handle that, if we can hang above 44.92, I think 45.40 is an easy target next week. Probably by midweek, go and tap that. And if we clear that, then we have a nice ABC target up above around 4,600. So it all maps out. Given that we can hold 44.92 on any pullbacks, and that'll give us strength and the confidence to the upside.
The other reason, Barry, that 44.92 is important is if we lose it, you're going to get a false breakout type structure.
Yeah, if we lose it, there's all kinds of things come into play. So it's a good one to watch. Eh? Mm-hmm. Timely. All right, moving on to bonds. Not much to talk about, just a couple of developments, I would say. We drew up this box a couple of weeks ago and was expecting it to trade in a range for a bit after this couple of month move up. And now, we have little bit of compression forming. We have a triangle, and these things always break in some kind of a dramatic way. So I think that's the thing to watch next. Let me delete these other lines. So here's the triangle we're watching. We're within that, and the triangle's of course inside of the range. So not much. I would say watch it, and but those are the lines to watch. Upside, we have two lines, one above and one below. Yeah, so I would leave it at that. And these numbers are still valid. We have 162.08 as our sort of drop dead support level, and the 166.10 would be the level to clear in order to at least go up and test the 170, 171 level up above. And just to take a quick look.
It's still Chop City on bonds.
Yeah, Chop City, and you can see how it's fairly obvious in the weekly. So, and the levels are already marked up. And yeah, I think watch it for signs, and I think the daily gave us enough of a clue to watch for a break of that compression, that's triangle that's forming. Moving on to crude.
Crude had a hell of a week.
Crude had a great week. I think we left it off last week with this ABC down being a target, downside target, and the potential low being in place. And also with this really strong support right under it. And we were looking for some kind of a bounce off of that. And it looks good. Bounce came through. And the crude, I had a couple of new numbers to add in here. I think the number to really clear here is 69. Although we had a strong move off of the coming off the lows. I think 69 really needs to be cleared now at this point. And then I think we have a shot, at least a $10 move left in it after that. Let me add that in for next week. So we're right there, right? We're tapping right at 69. And that's the level that we need to clear. There we go. And support remains around 66.75. I think we held it. You can see how Wednesday and Thursday we held that level, 66.75 here. And now if we take out 69, I think we're clearly going to take out this other, the larger trend line. This one's already been taken out, coming off last week. So I think it's in good shape to go up and test 79, 78, 79. That's the next. I really have nothing between 69 and 79 of any consequence. So I think it's a fairly clear shot and might be some decent trading.
Sure. I'm going to talk about crude as well because it's on the list of movers for the week.
So the weekly, of course, we corrected it, and it is a deeper correction than before. So we got to keep an eye on that. And I'm just going to switch to the square of 90. And 5/8 of this division held, which is fairly good. So now it's just, let's go on up and test the higher levels. I think crude is fairly simple, as long as we can take care of this 69. That's the thing to watch. Moving on to gold. Last week, where did we leave right off? 1789 was the number to watch. We were looking for it to get above and stay strong above it and go on to test 1882, is it? 1830.
32, yep.
And so gold is doing okay. It's bullish, it's fine, and held the level correctly. We're looking for the next level. I think once we take off 1832, we can certainly go back and go and test this 1917, 1915 level up at the old high. And, like you've been talking about, Ben, when that gets taken out, that'll be the the big move, right? That's what.
Yeah, I mean that opens up new all-time highs. We take that out.
Yeah. So for now, it's really 1832 we're watching for resistance and as a target, and to clear. Once you clear it, I think we're pretty good for till 1930 or so. Anything you want to add there? Well, you're going to.
I'm going to cover gold and silver. Yeah, both of them are looking good.
And on the weekly, this is the box that we drew in, and we're looking for it to hold above the 1766 on a weekly basis. That's that red dotted line. We're doing fine, held above it. So now it's really basically going up to test the upper range.
Mm-hmm.
And the upper range of that half square here, coming the square 52, the half square levels around 1877. So we got 1832, 77. It's right up in that area to watch. Moving on to the dollar. Well, we came up to the half square, looked, and it turned down fairly quickly. So we were expecting a test of the support, which is 92.55 from last week. And we're right there, knocking at
We're there. Yep.
So I would say it's possible that we take this out and maybe do a little ABC down and maybe test above 91.50 or so. 91.40 is our really sort of the drop dead level for a bullish bear line, at least for this phase of the market. So longs are about 91.40 or so. It's buoyant, let's say. And above 92.55, we should be in a strong place. So kind of watch it. We're kind of getting into this choppy zone here. And especially if we break this 92.55, we can expect a weaker dollar.
Which is bullish for commodities in this cycle right now.
Right. So that kind of matches up, eh?
It does.
And here's the weekly. Again, if we take out last week's low, which was 92.60, well, you can have a reversal there. So that could certainly take the dollar down a bit.
Mm-hmm.
That lines up. And onto the euro. So euro, what did we talk about last week? We talked about the support, of course.
Mm-hmm. Found support there.
Yeah, we had the lines drawn in. We're looking for support, and that worked out fairly well. We bounced off, nice move up. Only thing I see, I think we can go back and test the half square without any problem. Just watch this trend line coming down, which is really the low is connecting here. I just moved it parallel up above. And once we clear that, I think it should be an easy reach to go back and test these. And this low is that last low also registered in the on the weekly charts, just to give a better perspective. And this fork we've been watching for a while. We were looking for it to be tested, and it did get tested the week before, and we reversed and starting to gather some momentum. So so far it's okay. I wouldn't say the weekly has turned up. What I would be saying is that we definitely stopped on some support, and we can expect a little bounce. And
also looks like there was a little bit of a clean out false break move there at the low, like they like to do.
Yeah, right here, definitely we had that. So that gave us a nice move for the week.
Sure.
Right? So that was a move off that false break. And yeah, I think the half square is within reach. Yeah, that's all I got. I think we're covered. Not much to say because everything's kind of doing what it's supposed to be doing or what we expected to do. So following through.
Excellent.
Very good. Let me put it back to you. Okay, let's start off with the NQ.
The NQ, yes.
We had knife injected into it last week.
Yeah, I mean, remember this line we had here in this 15125 area was a brick wall. Well, you saw what they did with that wall. They smashed through it in one day.
Well, the thing is, you can see it could have broken out of any level, right? But it broke out exactly at that line, which means it's a critical line to watch in the future. So it's a level people should probably have handy. And what is that level? Or did you put it on the spreadsheet?
It is on the spreadsheet. And by the way, for people that haven't listened before, we have a spreadsheet with all of our levels and comments and stuff up. It's a Google Doc. We will, if you look at our Twitter feeds, we'll post the link to the spreadsheet when we post the recording tonight.
And it's also in the description below the video. You can see that.
Yeah.
So it's an easy link there.
So the level's around 15,145. It is a critical level. The interesting thing, and I love, as you were saying, you could see it's an important level because it could have broke out anywhere. Look at the day before that. It went right up to that level and stopped, closed there. And then the next day they jam it right through.
Right.
So we know this is an important spot. So we're going to want to keep an eye on that. The other things I'm looking at in this chart are we're getting a little bit of an expanding triangle here. So, there could be a target up here, around 15.5. We're also back testing this broken trend line from the May lows. And some other work I'm doing on larger time frames. The weekly resistance is about 15,643. The monthly is 15,700. So if these markets want to run, if the stock markets want to run, you got another 300 points or so upside left in the NASDAQ. So 2% more. And we would be into, higher time frame resistance. But right now, you got to say with that breakout, it's bullish. So we got to watch the levels, watch the price action on any pullbacks. You want to stay on top of here. If we end up losing this level, then all this price action becomes stuck, trapped in false break. So you could get a fast down move. But first, you got to see how we handle this level. And that's the NQs. Let's go to the commodities. When Barrie and I were talking today before the show, we were discussing about the commodities and where we are. And I said the message from the charts this week was that these consolidations and corrections are ending or have ended in across the board in the commodities. Some are further along than others, and we'll show that with the chart, but we'll start off with gold. And the reason I wanted to start off with gold was it is a formation and a pattern that we're seeing in most of these commodity markets, which is a correction off of a high where a downtrend line multiple times had stopped the advance. There's some sort of clean out low, which we've discussed, for the last month or so in commodities, that they love to do that. We thought we had them in early August around this August 9th bar, and a lot of them did make those clean out lows that day. And gold has broken not only through the downtrend line, but it also broke above this important square in the 1810 area. So, it's odds favor, and I put this up on the spreadsheet, that swing lows are in for gold, that this is your swing low right here. If we can stay above this 1810 level, then the odds increase even more. We pierced through it on Friday, closed well above it. Now the next big test is to see what happens when we come back and check that level. But gold it's the furthest along of the commodities. We'll go through and I'll show you the others, but the correction's been a little over a year, or approximately a year. I feel like this was the clean out low. We've now broken a downtrend line and a square. So gold is looking bullish. And that kind of jives with what you saw in your gold charts too, Barrie, doesn't it?
Exactly.
That's good. It's always nice when we come at the same conclusion from different methods, because it helps reinforce the probabilities that, your analysis is correct. Here's silver. You can see it's a similar pattern. It's a little flatter correction than gold. You can see it's been, relatively stronger because it hasn't gone down as much as gold had. It's lagging behind in terms of breaking out, but notice how this square down here around this 22, 23, 26 area has been really strong support. You had your clean out low here, which was a full ABC down right to the target. We cleaned out the low, immediately got back above, and we've been, they've been trying to close below it and push below it. And we keep pushing back above. And now we're starting to get full bars. We've gotten 4 full bars that are completely above that. And Friday, you see, they tried one last time, pushed down, got to the square, and we closed up near the highs. So silver, I think again, this was a clean out low. I think a swing low is in, and the pattern is bullish. We'll know it's further evidence that it's bullish when we break this downtrend line and we get above this half square, and the half square is in the 2502, 2503 range. And again, all these numbers are on the spreadsheet, which we'll post links for, and you guys can refer to those and see where the levels are. But silver again is looking bullish. I feel like it's going to follow gold's footsteps, break the downtrend line, and start getting above these important points on the square and the half square. Anything you got to add on silver, Barrie?
Not especially. I think you covered it well. I think that line is a key line, very important line. Even if you look back to last October, November, you can see how that line really was the balance point.
Mm-hmm. The half square.
Mm-hmm. The full square, and then half square to the upside, right?
That's right. Exactly. Right here.
And the main square below, right?
Yeah.
Mm-hmm.
Yep.
Yeah, and we know if next time we break that half square, it's just going to fly. So that's the thing to watch.
I agree with you 100%. So that's the levels are in the spreadsheet, and you can see it visually here, what we're looking at. The next market I want to look at is copper. Again, a similar pattern. We made a high in May. We've been correcting underneath this downtrend line. Copper had a clean out low type move. This was the probably area where tons of stops were for the longs. They cleaned all those out. We immediately, next bar, jumped right back above the half square. Friday, we were testing the full square. We broke the steep downtrend line. So the next important price we got to get over is this full square. And that full square is in the 433 area. We get on top of that, sit on top of that, then we break this downtrend line, and copper should be off to the races again as well. So copper looks good. It's following the other metals, just a little further behind. Any comments on the copper, Barrie?
Nothing to add other than the low came in fairly well. Another ABC driving into the low and stopped at very good support. So I think we're good to go.
Yeah, and one of the things to notice that all these markets spiked into that low.
Exactly.
And it's a telltale sign, especially in commodities, of how they do it when they're, before they make a big move, they push really hard in the other direction, take it further than you think it should go or will go or can go, and then they rip it the other way. And that's kind of what we're seeing in all these commodities right now. Here's another one that did a similar move. Barrie talked about the crude. I'm just going to add a couple other things with different levels. If you see the pattern, hopefully you can see it by now, a downtrend from previous highs that's held, any rallies, capped rallies for 3, 4, 5, 6 months or a year if you're talking about gold and silver. Steeper downtrend line where they accelerated into a spike low, ABC again. We broke through that. We're settling above a certain important level here, the half square. We haven't even tested it. It just pushed right through it. So the next important level in crude is up around this, Barrie's like in the 69 area. I'm in about 70 and a half, which again is another pattern you're seeing will coincide with breaking, we'll not only break the square, but we'll break the downtrend line. And it's a pattern we're seeing repeated in these commodities. And the key thing I said last week too is the confidence is boosted in the commodities because the higher time frames, which, we're reviewing those on a monthly basis, basically. But if you're looking at the monthlies or the weeklies, the prices are holding support. They're making higher lows and higher highs with increased sort of momentum. So there is a bullish backdrop that we're following with them, and crude is no different. Last week we showed you the monthly support, which is why both Barrie and I were bullish on crude last week, and I think crude ended the week up 11%. It had a really good week. So you stack the odds in your favor, and then you try and take a position and see how it plays out. Speaking of great performers, let's take a look at natural gas. And here we have natural gas. Natural gas had a fantastic week, as you can see from the chart. The correction was more in time than price. We did pull back from a half square to the full square, pushed a little below it, but as you can see, it came right into support, structural support. The highs from June and July supported the low. Again, look at the structure. See that spike low? Push down real hard, see what they can get from grabbing stops, and then they reverse it back up. Natural gas is looking really bullish. I think a lot of this could have been related to the hurricane that's going to go through the Gulf this weekend, Sunday, Monday.
Mm-hmm. Right.
If we see some damage of supplies and some issues with supply, this thing could go crazy, because we've seen that in other markets like lumber and some other commodities, shipping container rates and other things, that when there's a shortage, a supply issue, these things really fly. So
right.
Hopefully if you're in that gas, you'll be the beneficiary of that, but we're watching this, a very bullish chart. The most bullish commodity right now is natural gas. So we're happy with how that one's going. Let's go look at the grains. The grains were also mentioned last week as potentially bottoming. Let's take a look at some of the grains. Here we have soybeans. Now beans, again, notice the pattern. We started with gold, which was, in a downtrend, but breaking through the main downtrend line. Other commodities were breaking through these steeper, shorter term or intermediate term downtrend lines. The grains are not there yet, but with the structure and the way they're acting, I think these markets are set to move higher, again, based upon the moves we're seeing. We had a low in place here and a low in place here back in January. They make a move down, a very fast, spiky move down. They clean out the lows, and then they reverse.
Hey, what's that level? The half square?
The half square here?
Yeah.
That's like 1297.
Okay. So any corrections really should hold above that at this point?
Absolutely. We're getting a little bit of a pullback here, but look at what happens on Friday, right? They push it down, and we close up near the high.
Mm-hmm.
So,
that's a good correction. That's a good counter trend.
Yep, 2-bar counter trend. Mm-hmm. So we're looking for a reversal. The first thing we want to do is see it take out this steep downtrend line. Then the next is the full square. And then once it can sit on top of that, then we're looking at the half square, and you just kind of go level to level, right? You watch it and you see how it plays out. But when you see a move like this, where you had previous support on an important half square, they do a big bar down to take it out, and then immediately reverse the next day and the following days, that's a clue, right? That's a clue that there are buyers here. The market's bid, and you want to look for good entries and good spots, good support levels to get in. So we're very bullish on beans, and it's looking like it's ready to go. Next one we want to look at is corn. And here's corn. I think you'll recognize the pattern again. You got a downtrend line, you got steeper downtrend lines. You got a market that spiked down into support, took out previous lows, both near term and 6-7 months ago. Mm-hmm. Reversed, and now it's pushing. Right now we're banging up against this half square. So that's not only the downtrend line, but it's the half square. So next week, if we can push up above that 555 area, be very, very bullish for corn. And the next thing will be this downtrend line and then the full square.
And if you look back to your left, you can see February, March, what happened at the same square level, right?
Mm-hmm. Right in here.
Right in there.
And so that's giving us confidence that, we got a low, we got a higher low. Let's see if we can get up here and start taking out these resistance levels, and then we're off to the races in corn. The best looking chart of the grains is wheat. Let's take a look at wheat. Here's wheat. Wheat, as you can see, has been doing a high level consolidation since it made this high. And it's banging around between the full square up here and the half square here. Those levels are 709 on the downside and around 750 on the upside. But as you can see, they haven't been able to push wheat down as much as the other commodities, because I can't even draw a downtrend line, right? We broke the original one, which was way over here, pretty easily in early July. So wheat's the leader of the grains. We're looking for higher prices in wheat. The next level that we want to see taken out and sat on top of is the 750 area. But wheat looks really good. The softs, which I only showed one last week to show they were earlier in their correction, they are still in consolidation mode. So I'm not going to highlight those charts this week, but know that for cotton, cocoa, coffee, and sugar, the higher time frames, meaning the weeklies and the monthlies, are extremely bullish. We're bullish long-term on them. We're simply waiting for the signals from the market that the corrections are over or near over. And when that happens, we'll highlight them on here so that you all know what's coming and what the probabilities favor, and can make a determination of whether you want to get involved or not. So that's the summary of the commodities. You got anything else to add, Barry, before we sign off?
Well, just that, if you guys like what we talked about, if you find some value in this, to, like our videos and perhaps share them, that would help us grow a little bit and get some more reach.
Yeah, absolutely.
I think our thing is we're super low key, so we're not really good on marketing.
Self-promotion
is not our thing, because we're mostly focused on trading and technical stuff. So we kind of do this for fun, and but it'll be better if there are more people involved. So if you guys like it, please, share and hit the like button. That'd be nice.
Absolutely. And know that we were excited last week because we felt that things were changing. I feel like we got the confirmation of that this week. So don't be lulled to sleep by a market if you're watching it and it's boring, because it feels like we're on the precipice of change. And this past week was just the beginning. So we're hopeful of a volatile and fast moving fall. And I think that's going to come to fruition here as long as what happened last week continues. So best of luck to everybody, and we'll talk to you soon. Thanks, Barry.
Thanks, Ben. Have a good week.
All right.